We're joined now by Jim O'Sullivan at MF Global. He's the chief economist there. He joins us from New York. With me here in Washington, former Treasury Secretary Paul O'Neill. It's a Brennan, O'Neill, O'Sullivan panel, and we're not talking about Ireland. We're talking about the United States' debt crisis and some of the economic issues that we're facing here at home. Jim, quickly give me your response here to this latest data point that we got this morning in terms of consumer spending. It seems like a negative indicator for the jobs number on Friday.
Hi, Margaret. Yes, well, 2 points. First, obviously it's a negative number on the headline, but in terms of interpreting it, that's a nominal figure. And of course, gasoline prices were down in June, so part of that weakness is just the drop in prices, which is reflected in nominal numbers. In real terms, it was zero. It was flat on the month, so not quite as weak as it looked. And second, over the last few months, there has been a backup in the saving rate. The saving rate was up to 5.4% in June. It was 4.9% in the first quarter. So we've seen less growth in consumption than income, and that is consistent with consumer confidence taking a bit of a hit here. But in the meantime, there has been some spending power built up, and hopefully we'll start to see the confidence numbers at least stabilize with the end of the debt limit turmoil. So there is some spending power there in the next couple of months to reverse this.
We're already hearing people question whether we'll see more stimulus, though, from the Fed in some form. Do you think that that's needed, and were you disappointed that here in Washington a payroll tax holiday was not included in the debt deal that's being voted on?
Well, ultimately that's important. Of course, they have another 5 months before that kicks in. That will be an important issue for 2012. Frankly, that's more important in terms of the impact on the economy than the deficit reduction in 2012 as part of this package. The package itself doesn't really have much by way of front-loaded drag. It's only probably worth a tenth or at most 0.2 of a percentage point of GDP in 2012. But there is a big tax hike scheduled for January. I wouldn't necessarily have expected it as part of this package, but that is something to watch for over the next couple of months.
Mr. Secretary?
So, Jim, how do we get going from where we are? I was saying to Margaret, the businesses I'm involved with are doing very well. But they are businesses that are based in the United States but have activities all over the world, including in China and Europe. And so, in a way, I see a view that's really quite positive for the activities that I'm directly involved in. And I don't know quite what to make of the fact that we're kind of flatlining here in the broader measures of our economy.
Well, hi, Mr. Secretary. Well, there have obviously been some ups and downs in momentum since the recovery began 2 years ago. Overall, it's a disappointing recovery. You go back 3 or 4 months ago, and it looked like momentum was really picking up nicely. First 4 months of the year, payrolls here in the U.S. were up 179,000 per month, which was starting to look pretty respectable. But of course, there's been a loss of momentum recently. I think there are reasons to expect the numbers to start looking better again in the next few months. Certainly, the drop in gasoline prices will help. The end of supply chain effects from Japan in terms of auto production starting to rebound will help. And hopefully there'll be some relief for consumer confidence following the budget deal being agreed to as well. So I do think the numbers will start to look better. But the net of it is it's a disappointing recovery. Obviously, compared with history, this is a weak recovery. But over time, the headwinds do fade. The banking system certainly has strengthened, and we're starting to see banks ease lending standards. But that said, obviously, the momentum in the numbers over the last 2 or 3 months does look quite weak, and we'll see to what extent that starts to turn around over the next couple of months.
Yeah, Jim, it does, as the Secretary was saying, sometimes it's counterintuitive. You see this growth happening in corporations, but it seems like it's happening outside of those U.S. borders. Hopefully it's a forward indicator that we're going to get some of that benefit here at home, too. Jim, thank you so much for giving us your analysis.